You are listening to chartingwealth.com for Friday, the 10th of July, 2015. What do we always do? Well, we always start with IYY. And we can see that the markets continue to move down pretty substantially. If we go and draw back, you can see where the market bottomed out last time. People always say, you look at this. You can see on several different points here. You can see here. You can see even here. And the market has been holding somewhere in here last couple of days. That's where it bounded down to. So we may have some support there. We may not. So pay attention to this line somewhere in the neighborhood of about, what is that, 320, 103.20. We're talking the big market. Why do we pay attention to where support levels may have been in the past and where you may see them again? Is because of the last thing I said. Where they've been in the past, you may see them again. When we look at our chart, we see that over the last 2 days worth of candles. No, actually 2 candles worth 2 days. That's four days worth of candles. You can see on the candle on the 7th and then the candle again on the 9th, we had it bottom out at about 303.20. What does that mean? Well, there may be some support there, so let's just be aware of that. Keep that in the back of our mind. What do we see, though, when we look at the broad market? We see that it had topped out back on the 23rd of June and then started moving down on the 25th candle and kept moving down. Now, again, we are looking at a 2-day candle chart. This is not a single day. This is a 2-day. So we do have, again, strong down moves when we look at our divergence, that is the moving apart of the MACD and the signal line. We see it's gotten even greater today, as has the derivative oscillator, which if you are looking instead of just listening to us, some folks just are able to listen. Those who are looking at the video that you can always find at chartingwealth.com, you can see that the light red rectangle bar has gotten actually longer, showing that the derivative oscillator is getting longer in the down move. So the market is going down substantially, has been. So pay attention to that. What was the market today, though, in IYY? As far as the day went, it was up technically 0.22%. Now, again, we don't pay attention to the 1-day chart, to the short chart. We look at the longer 2-day chart. Why? Because it just works better. Everybody seems to be looking at the 1-day chart, and that can, again, if we can find time periods that work, which we have found, the 2-day time period works. That's what we make our big chart that really gives us the full idea of where the market is going at this point. Now we're going to drop back, as we always do, to our 4-hour chart. We can see what happened in the day. Now, what happened? Well, this morning, the market bumped up. It actually went up in the morning, touched the 2-day trend line, and then in the afternoon rolled off. Still remained up a little bit for the day, 0.22%. So not even 25% of 1 point, but it was up technically a little bit for the day. However, the derivative oscillator got bigger. It's a light green rectangle that got a little bit bigger than the prior one this morning, and then the prior one Thursday morning, and then the prior one Wednesday afternoon. And the derivative oscillator didn't cross over going up, so still don't have that momentum switch yet. Still below the 2-day trend line on the 4-hour chart, so we are technically still in down moves on both our small chart and our large chart. That is our half-day, 4-hour, and our 2-day charts. That's where we are in the total market. It's always nice to know what the total market's doing. Typically, the S&P is not always exactly what the total market is, but it's closer because it's 500 big stocks that are a large chunk of the market. Let's see what's going on. Well, of course, the SPY, the S&P 500, turned over moving down way back between the 28th of June and the 1st of July. It's continued to move down, and in fact, the derivative oscillator heated up, going down even more today, as did the MACD, a greater divergence between the two, and you can see what you can see. We've got a strong down move still going. Now let's revert back quickly to the 4-hour chart. What do we see? Well, we see the same kind of thing that we saw this morning with the up move, and then it rolled over and went down in the afternoon. It was technically up 0.18%, so not even a fifth of a percent up this morning. I'm sorry, for the day, well, this morning total. And so we're still below the 2-day trend line on the 4-hour chart. We are still technically in a down move on both the half-day chart. That is, our MACD is still in a down move. It crossed over going down back between the 7th and the 8th. And it is in a down move. And our derivative oscillator is in an up move positive. But again, the main chart that we look at, of course, is our 2-day. And it's nice when our 4-hour chart also parallels that in the MACD. That's where we are on the S&P 500. Now, let's go back to our 2-day chart. And let's range out to my favorite index, which is the Qs. Qs is still in a strong down move, having crossed over going down way back between the 3rd and the 5th. And we saw a bump up during the Fed meeting back around the 19th or so, and that is of June, and then a strong down move since before July even began. And again, this is interesting. Look at, we have the candles for the last 2 days ending about the same area at 105.98, so about 106. We can see that back on the 6th of May, we also hit that same area, but I'm not seeing any real other support other than that. So again, pay attention to that. Both those moves are outside the Bollinger Bands, however, still a strong down move. Derivative oscillator heated up, and the MACD and the signal line got further apart, which again shows you that there's still lots of downward pressure, lots of bearish action. Now let's convert out to the 4-hour chart, and you can see that the market moved up a little bit in the morning and then substantially more down in the afternoon. The Qs is actually down 0.06%. So very, very small movement down, but it is technically down, and it is below the 4-hour chart is below the 2-day trend line, which again is important. We want to see that trend line continues, and that would mean if you're in a down move, of course, continued down moves are expected. Not guaranteed in any way, and of course we are not a stock calling service. All we do is talk about things. We don't give advice. Don't take anything we say as advice. We are not giving any advice in the market. We love analyzing what's going on, talking about it, but we ask you, if you're going to do any trading at all, you do virtual trading and you practice and you get really good, and then you make your own decisions. So now let's range back out to the 2-day chart, and we'll look at gold. What has gold done? Well, let's look at gold. Gold moved up over the last 2 days, 0.24%, so 0.25%. But look, it's still not above the 2-day trend line that connects 1, 2, 3, 4, 5, 6, 7 candles. The derivative oscillator heated up, and it appears that the MACD itself is still substantially apart, about as much it was apart on the 7th. It still is. So we don't have a reverse, although when you see a green 2-day candle, it does give you pause for concern, but that happened back on the 29th of June. And then over the last 6 days following that upward move on the 29th, that 2-day candle, you saw the next 3 2-day candles move down. So it doesn't necessarily mean anything dispositive. What do we pay attention to the most? The MACD. When the MACD rolled over going down between the 19th and the 23rd, that's what we've been paying attention to. Now if we revert back to the 4-hour chart, take a look at it. What do we see happening? A big bump up in gold this morning, and then a leveling off and a down movement in the afternoon. Looks like on the 4-hour chart gold might be getting ready to cross, but it also looked like it was moving to cross over between the 6th and the 7th, and it didn't. However, we do see the derivative oscillator has switched over, so we'll pay attention to gold. It's still below the 2-day trend line, which means a lot with a trend line this long. So let's continue to watch gold. Everything on our charts is still in confirmed down moves on the short chart, the 4-hour, the half day, and the 2-day long chart. That is where we end up the markets on Thursday the 9th as we move into Friday the 10th of July. We always wish you the best in your investing. We ask that you please go to our website. Follow us on Facebook and Twitter. We love your comments. We love it when you rate us highly and you say nice things. And if there are things we're not doing you'd like to hear from us, please let us know. Thanks so much for paying attention. God bless you. We wish you the best in your investing from chartingwealth.com.